Hi, and thanks for joining us. I'm Holly and you're watching The Hot Performers. In this edition, we're going to look at 3 dividend stocks that surpass the ASX 200 performance. First up, CSR is the name behind some of the most trusted and well-known building items for constructing houses and commercial buildings. It's one of the constituents of the ASX 200 and has a history of providing dividends since 2012. CSR recently announced an interim dividend of 0.135 Australian cents per share, payable on the 10th of December, and its half-yearly results for the 6 months to September. The company reported a 30% growth in its NPAT, while trading revenue increased by 6% and EBIT by 41%. CSR's biggest business, building products, is doing well in the existing market and advancing its plans to broaden and expand the business for the future. Plus, the group's earnings are supported by contracted transactions over the upcoming years from property and a robust hedge position in aluminium. Next on our list is Domino's Pizza Enterprises. That is Domino's biggest franchise outside the USA. It's also a big player on the ASX 200 and has constantly provided dividends since 2012. The restaurant gave a final dividend of 0.851 per share on the 9th of September and delivered a year-to-date return of 43.49%. Then on the 2nd of November, Domino's reaffirmed its long-term outlook, reporting a 14.6% growth in network sales. Online sales grew 21.5% and underlying EBIT for the period was at $293 million on revenue of $2,199. Despite substantial societal changes in each market, Domino's Pizza delivered positive sales. Network sales in 2021 until the 2nd of November were 8% higher. This compounds the 14.9% sales growth compared to the previous period. And then in 2022, Domino's expects some inflationary headwinds, comprising an increase in energy prices as well as a rise in food costs. And that brings us to the last stock on our list, Tabcorp, the diversified gambling entertainment company, which operates 3 leading businesses: lotteries and keno, wagering and media, and gaming services. The company has a history of providing dividends since 2012, and then in 2021, it delivered a year-to-date return of 28.32%. During the financial year 21, Tabcorp was able to manage the disruption due to COVID-19 quite well, and it also reviewed the future strategic course of the company and concluded to demerge its lotteries and keno business. Despite the pandemic disruptions, its business remained resilient. The group delivered strong operational results, with EBITDA increasing by 11% and NPAT for the period at $269 million. Tabcorp announced a fully franked dividend for the financial year 21 of 14.5 cents. TAH noted impressive performance from its wagering and media business. Then on the other side, its gaming services were hit hard during the period. In the September quarter, COVID-19 restrictions have impacted the revenue of the company. Lotteries and keno revenue declined by 0.2%, however, that same revenue grew 1.4% in a growth to the Powerball and Saturday Lotto. Then wagering and media arm of the company dropped significantly by 17.2% as venues were closed around the country. Well, that is all for now on the Hot Performers, but stick around for more live market reports and insights exclusively on Kalkine TV. This is Holly Shields signing off.